The risk rally resumed on optimism of additional easing from the US and China, following the OMT announcement from the European Central Bank last week. The Dow breached the 2012 high of 13,338 overnight, even though it hasn't managed to close above that level yet. Asian equities are broadly higher, with the Nikkei up over 130 points whilst the Hong Kong Hang Seng Index is up over 180 points. The dollar was additionally weighed down by Moody's warning and faces tremendous selling pressure against other major currencies. The dollar index broke the 80 psychological level and is still on course to a 78.60 support level next. The main focus today will be on the German court's ruling on the European Stability Mechanism, but markets could probably look beyond it to tomorrow's Federal Open Market Committee meeting. Moody's warned yesterday that it could lower the rating of U.S. government debt if a deal cannot be reached on budget negotiations. The ratings agency noted that in case the negotiations lead to specific policies that produce a stabilization and then downward trend in the ratio of federal debt to GDP over the medium term, the rating will likely be affirmed and the outlook return to stable. However, if those negotiations fail to produce such policies, Moody's would expect to lower the rating. In China, Premier Wen Jiabao attempted to comfort investors by assuring that the government would strive to boost the economy. At the World Economic Forum, he stated that the government would give greater priority to stabilizing growth, and that he has full confidence that the target for China's economic growth this year will be met. Wen emphasized that, be it monetary or fiscal, we still have ample strength. He also noted that there remained 100 billion RMB in the stabilization fund which would be deployed if needed. The German Constitutional Court will decide on Wednesday whether it would allow Germany to join the European Stability Mechanism, a fund worth 500 billion euros for bailout of debt-ridden countries in the Eurozone. Opponents of Germany's participation in the ESM are Conservative legislator Peter Gore-Wheeler, a group called Europe Needs More Democracy, and Germany's Left Party. The court will decide whether to issue a temporary order that would prevent rectification of the ESM. The order would last until the court announces its final decision on the full case, probably early next year. Also in Europe, after meeting with Greece's Prime Minister, the ECB issued a statement, saying that both parties agreed that Greece has already taken significant steps towards budgetary consolidation and economic modernization, but that major challenges remain. The Prime Minister assured the ECB delegation of his and his government's commitment to getting the adjustment program back on track and continuing the necessary reforms for Greece to regain competitiveness and put its economy and public finances on a solid footing. In Portugal, a Troika delegation also released a statement after his visit saying that, overall, this review confirms that the program is making progress, albeit against stronger headwinds. On the data front, Japan machine orders rose 4.6% month-on-month in July while the tertiary industry index dropped 0.8% month-on-month. Domestic CGPI dropped 1.8% year-on-year. Australian Westpac consumer confidence rose 4.6% in September. German CPI was finalized at 2.1% year-on-year in August. UK job data will be the main focus in the European session. Eurozone industrial production and US import prices and wholesale inventories will also be released. Aussie dollar, US dollar daily outlook jumping to as high as 1.0488 so far today and broke the 61.8% retracement of 1.0612 to 1.0165 at 1.0441. Intraday bias remains on the upside and the current rally should target the 1.0612 resistance next. On the downside, below the 1.0426 minor support will turn bias neutral. A break of the 1.0322 minor support will now indicate that such a rebound is finished, and will flip the bias back to the downside for retesting the 1.0165 support. In the bigger picture, price actions from the 1.1079 high are treated as a consolidation pattern in the larger uptrend in the form of a triangle. A fall from 1.0612 could be the fifth and final leg in this pattern. The question now is whether such a decline from 1.0612 is finished at 1.0165. A break of the 1.0612 resistance will be the first signal of a larger uptrend resumption, and will turn focus to the 1.0852 resistance for confirmation.